Welcome everyone back to the Alpha Capital YouTube channel for another trading podcast. I'm your host, Words of Wisdom, and we are here with the one and only, the king of prop firms. I would say the number one prop firm trader in the world personally. I don't know if he will accept that title or not, but we'll find out in a minute. And it is the one and only Kyle, aka JadeCap FX.
How's it going, Riz?
I'm good, thank you. I'm good.
I might not be number one anymore. Andrew NFX might be overlapping.
No, well, this is what I said to him today, actually. You'll find this funny. All his titles say number one band trader. So I said,
I can't argue with that.
I said, bro, you need to change that. Like, that's not what you want to be known for. You want to be known as the best.
Yeah.
But it's great though. It's great to see, people like yourself, people like Andrew, still crushing the game, because why? I would say that because you come with edge, professional mindset. You've showcased that consistently. I don't think anything's changed over the time that you've been posting or anything like that.
Yeah.
And it's incredible to see, man. Incredible. Obviously, with Alpha, just recently to mention a payout, obviously, I think it was, if I'm not mistaken, just under 50K.
Yeah. Oh, 40K.
Yeah.
50K, like, profit, and then my split was 40K.
Yeah.
Thereabout.
Incredible. Absolutely incredible. It just shows that you're still going. Still going.
Yeah, man.
Those on what? Is that on 400K capital?
Yeah.
Yep. Nice.
But obviously, there's been a lot of change in the space.
Yeah.
Right. So trying to stay even keeled and consistently trade, it's almost like you have to block out all the noise and just focus on trading properly.
How's that been for you, actually? That's a good point that you mentioned there. Like, since we've last spoken or people may have seen you on a podcast, that has been a huge transition.
Yeah.
You were like very large capital, I think multiple seven figures in capital, if I'm not mistaken. That a lot of it's probably been reduced because of the changes in the industry and a lot of firms not servicing the US. I know you went to futures for a bit as well. What's that been like for you? Tell us like that sort of the mindset. Was there any sort of worry, any change, drastic changes that you started to make and sort of what you're doing now?
No, so no drastic changes to my trading, but obviously as traders, we have to constantly adapt and be flexible with market conditions, with everything going on, regulations, whatever the case is. So that's just something that I've always ingrained as my career has progressed, because nothing is guaranteed forever, right? So we have to understand when we're coming into the prop space, there's just an opportunity to leverage your capital, right? And that's really all it is. So if those opportunities obviously just disappear, you have to find other avenues, right? It's either you're going into personal account, you're trading less firms, you're trading futures, whatever the case is. Obviously, futures rules are a little bit different. I think they're a bit more strict. So it forces you to adapt and change to those specific rules, or just trade a personal account and then there's no rules, right? But really the biggest thing is to be comfortable adapting. And I think I see it a lot with traders that kind of struggle with being able to adapt to new things and new concepts. You just try not to overthink it too much, right? Because you're not in control of what these props are doing. You're not in control of if they go under. Obviously there's been a bunch of firms that have gone under. I can't control that. Like, as much as I would like for them to come back and be able to give me my accounts back and be able to trade at the capital that I was used to, I can't. There's nothing I could do about that. So all I have to do is pivot, right? And not not think too much on it. Just be able to pivot, be able to obviously adjust my trading style as needed, or go into a personal account and trade that way. But obviously some huge payouts at Alpha, right? Mm-hmm. I'm not doing a 0.25% risk. And some people are like, oh, this is the guy that preaches 0.25% risk. But here's the difference. I'm only telling newer traders to stick with a 0.25% risk so they can stay alive, because they haven't built that skill set to not be able to blow the account. All right. So that's the easiest way for you to be able to sustain yourself and preserve the capital long enough for you to be able to learn the market. Whereas somebody that's more experienced, like myself, Andrew NFX, some other big traders out there, we know when to size up. That's the big difference. Is like we know exactly when to size up, which a lot of traders, they don't know when to size up. And I've been studying a lot of different things outside of the trading space. And I recently started studying poker, right? So depending on the pot odds or whatever, you have to know when to size in. And I think what a lot of newbie traders try and do is they don't know the math behind their setups. They don't know the probabilities. They don't know their edge well enough to be able to size up, but they're sizing up when they don't have the advantage. So like based on where you are in the rotation of the table, you have the small blind, the big blind, whatever the cards come out. and then you're going in order. So when the market is showing you its hand, right, a lot of times new traders just size in max leverage, right? But they don't really have the edge. And that's what I think differentiates the really great traders from just the average traders or the traders that are kind of just getting their feet wet. Is knowing when to size up, because a lot of times you're going to have just a couple months out of the year where you're hitting out of the park. And that's paying really for all the slow months, which I've had a slow year, I would say, compared to last year. I think last year was a bit more volatile in terms of market movement. Maybe not so much in indices, because indices are kind of just rallying pretty hard, and we're seeing a bit of a correction now. But in the FX markets, they're consolidating. And when it comes to adaptability, that's just something that you can't teach to somebody else. They have to experience it. And that's where I think I excel, is because I've been around the markets for so long that I've seen those conditions, right? Imagine you had a lot of new traders that entered the space right after COVID. You know, it's basically just a one-sided market going up. And then when the market conditions change, they exit the space because they don't know how to adapt. They haven't traded a consolidating market. So all of a sudden, they don't know what to do. And that's experience that, you know, nobody can give to you. You have to actually be in that market condition, trading and learning how to be flexible, because that same strategy that you use when the market is just going straight up, where it's just, I'm only, you know, trend trading essentially and just going long on the market, you have to have a completely different style and be able to adapt, because as soon as that market condition changes and you're not prepared for it, you're going to eat away all that capital, and it's going to be extremely frustrating. And you're, at some point you might think about just quitting, because you're going to have all that self-talk, that negative self-talk, and say, I can't really do this. You know, it's very difficult. But being able to have the experience to be able to trade in all those different market conditions, it's something that takes a lot of time, obviously, right?
It's interesting you point that out in terms of the people who entered during COVID. They made money on the way up. A lot of the time, not only did they just leave after it came down because they're not used to it, they lost their money as well that
Yeah.
they made, maybe even money on top of that, which is so interesting, because it's like, you know, people think it can be easy when they're in those moments.
Yeah.
They're hitting a good
It's a
ride.
tale as old as time, you know. They say you're a genius in a bull market.
Yeah,
right.
And we might be seeing that change, you know, happening relatively soon. We're seeing a lot of interesting things happening all at once. Markets indicating quite a lot as well. But another interesting point just to ask you about, in terms of, just off the back of what you said there, in terms of the risk, you know, were you more using the 0.25% risk? As I know you were still dynamic even back then, but you were using more of a 0.25% because you had such a large capital as well. So therefore the 0.25% was still quite substantial size.
Yeah, exactly. So now that my capital base has probably been cut in half by 3/4, right? So like, instead of trading at $5 million, now I'm trading at like 1.5. It's a huge difference. So not only am I risking more, but my risk of ruin goes up as well. So I'm at higher risk of blowing the accounts and then having to get refunded again, and go through that process all over again. So yes, there's pros and cons to it, but it's just me having to adapt, because I'm used to that level of income and I have the experience to be able to trade high risk like that. Whereas, you know, if I was still funded with $5 million, I'd probably still be trading conservatively, because I wouldn't have to do as much to make the same amount of money.
It's so interesting when you point these things out, because a lot of people don't experience that, right? They're still trying to work towards getting that large scale funding. So it's an insight they get to have, and very similar to what Omar said on a previous podcast, is that people have to learn regardless of what you say, but hopefully they can pick up on the point of that. Not only the experience, like, you've got the experience, you have the edge. Those two key points there, because you've been trading, in terms of actual trading, like over 10 years, right?
Yeah. So before I even found the first prop firm, which was FTMO, I had been trading for 8 years already. Right. So like, before I even touched the account, where a lot of new traders that are coming into the space, they don't even know what spread is, right? They don't understand what a bid and ask is. But having that experience going into prop was just like, all right, well, I already understand how to trade. I just have to fit my system that I already have into the parameters that the prop is giving me. I'm not trying to go into the challenge trying to learn trading while passing the challenge at the same time, which is what a lot of traders are trying to do right now. And I don't blame them. You know, it's like, well, all right, well, I put $5,000 into a personal account for many years trying to flip that account. Well, all right, well, it makes sense for you to invest in your education and to learn trading at the same time, with the possibility of getting paid out with a prop firm, because I can't tell you how much money I've blown in a personal account. You know, it's definitely into the tens of thousands,
Mhm.
right? But it's a learning lesson. And it's the same thing if you're failing prop firms. Just because you're failing challenges right now doesn't mean that you can't pass them in the future. And it's not scammy, right? There's a risk of every business failing. It's just a cash flow issue, whatever the case is. You have to take that risk, right? Because it's the same thing if I put my money into Oanda. If they go under, they're not FDIC insured, so I'm not going to get my money back. There's always a risk in that, when you're operating in capital markets, there's always the risk of you losing money. That's just plain and simple. And you have to be comfortable putting that money into whatever vehicle it is that you're trying to trade with.
Definitely. And if I'm not mistaken, you've done over $1 million in payouts in total.
Mm-hmm.
And obviously losing this much funding as well can be very alarming to your monthly sort of P&L, not P&L, but your monthly income when you are profitable and getting these payouts, right? It's a large shift, no doubt, in comparison. And the reason I'm saying that, though, is that, someone in your position where you're making that much money and you're making that sort of returns very easily could be spending quite often, increasing your
The lifestyle.
monthly expenses, and your lifestyle. But from my observation, from what I can see, you haven't really done that to a very large degree anyway. Why is that? Why haven't you done that? And or if you have, you can share with us as well, hopefully. But why haven't you done that? And how important is that, do you think, as a trader or just generally someone who's trying to be successful in this day and age, and you are starting to make money? Why is it so important to be very careful of that expenditure?
Well, so it was really a story that Tom Dynasty brings up like pretty often, and he said he's seen multiple traders come in the space, make a ton of money, and then at some point they're not able to keep it. So I'm always trying to protect the downside, whatever that downside is. Maybe I have some other expenses coming up, emergencies. Just overall, I own a home in New York. Obviously, if something comes up, I have to pay for it. Like I'm not gonna go out and spend. There's a certain bucket that you should have for discretionary income, right? So when you're losing a big chunk of your monthly income, you should be able to sustain the lifestyle that you have, pay for all of your expenses, and then maybe just shrink your discretionary income where you're not spending as much. And I think even when I was making, upwards of 50, 100K a month, I still wasn't using it for a whole lot. I just noticed there was a lot of prop traders that were, maybe they're a little younger, whatever the case is, just buying cars or buying liabilities essentially, and not understanding that this might not last forever, right? And that's kind of what you see. Like, obviously, if your back is up against the wall, if things start disappearing on you, right? Now, all of a sudden, the ability to create income goes away, right? And now what are you going to be stuck with? You're going to be stuck with liabilities, and you're not going to have the safety net in order for you to continue trading for a living, which is always in my perspective, I'm never trying to go back to work for somebody else. Like that's just like the last thing I'm trying to do. Right. So I'm always giving myself a buffer, which we've already talked about. Before I went full time, I had saved up almost 2 years of expenses, which is way more than what people probably should. It's just I think the biggest hump is obviously being comfortable leaving your job, right? Because I was leaving behind a decent career.
Would you say then, based on what you said there, and even like with the risk, everything that you were talking about before, would you say that you're not necessarily a very high risk taker, if that makes sense?
At times I am, at times I'm not. But I would say overall, I'm not a high risk taker because I think I've always made more money just being way more conservative because the market's going to do most of the work. And it's those times of high volatility where a lot of people will give back a lot of what they made. So I'm always trying to be mindful of how much risk I have on. And, if you want to make more money, get better at scaling in and adjusting your stops. So if you want to put on a bigger position, don't, add in while your stop is in the initial area. At least try and cut the initial risk in half. Let's say if you have a 10-point stop loss, try and reduce it to 5 before you add another position on. And it's just like poker, right? Like if you have a really good hand, you're not going all in on the first on the flop, right? You need the other until the other cards come out. Then you actually know, all right, well, now I have a real edge against my competition. Then I can start sizing in. And I talked about this with Omar a little bit, like just throwing out a feeler position in the market, because a lot of times if that market goes directly against you, the worst thing you're going to want to do is add or be at full size, right? Because as soon as you throw that position out there, if the trade's not going your direction, why would you want to add?
It seems like common sense.
Honestly, it seems
Seems
common.
like it, but
It seems like common sense, but
it's easily done though. What do you think? Do you think it's human nature just to sort of want to get into a trade? Do you think, okay, I've done my analysis, it's saying this,
yeah,
let me get in?
it's all behavioral actions.
Mhm.
It's all your habits, define the results that you have. And if you have a desired outcome that you're trying to get to, I've been listening to a lot of James Clear. He
Yes.
had the masterclass on atomic habits.
Yep.
So really, if you have a desired outcome, you have to make sure that all the small habits that you're doing lead to that desired outcome. If you are somebody that tends to overtrade or tends to over leverage, those habits will just keep stacking upon each other, and then you're really building poor habits, which it doesn't pan out well in trading. All those things that you're doing, without realizing, it's all self awareness. You have to be aware that you're constantly over leveraging or constantly adding into positions that you shouldn't be. There's all these different poor habits that amateur traders have, which when you're in flow and you're a consistently profitable trader, it's almost the opposite of that. You have really good habits when it comes to the small things. And that's the biggest difference, I think, between really great traders and really poor traders, because there is a really wide gap.
Yeah. Yeah. What would you say those habits are?
Honestly, it's having an edge, but sticking to the edge, because it's so simple to put together, let's say a 3-step edge or a 4-step, 5-step edge, system trading plan in place. It's just how can you follow that system day in, day out? And a lot of times your emotions and like your behaviors are derailing you from following that system. Maybe you're getting angry and you follow, let's say you follow the rules on the first trade, but then your emotions kind of put you on tilt, and then all of a sudden you're going off plan, and now you're taking a trade that you shouldn't be in. Now all of a sudden your position is offsides, whatever it is, and you're basically on autopilot mode where your emotions take control of you. It's really the fight or flight mechanism. It's just, how do you actually emotionally react to something happening?
Would you say that you go through a process then when developing those habits or trying to develop habits to help you? You first have to try and be more self-aware and sort of journal or track how you're reacting, as you say, so that you can pick up on the patterns and negative habits.
Yeah, exactly. So there's not only is there patterns in the market, there's behavioral patterns that traders fall into. Let's say if you just wake up late and just hop on the screens, that's a behavioral pattern that you have to recognize that this is probably not beneficial to my end desired result. So you have to start changing the small things here and there. But what I noticed was you can't focus on every small task at once. Let's say if I'm really poor at risk management, right? And that's something that was a really big, I guess, needle in my side was the risk management. I really made it a point over a couple of years to only focus on risk management, because I already had a simple edge that I was trying to follow, right? It was like the fair value gap and the Judah swing. So all I would focus on was making sure that last piece of what was holding me back the most, because I would have good trades, I would have bad trades. The one thing that would kind of put me on tilt was if I took a position that was too large and I lost, because the one prior to that, the trade could have looked the same. It's just as soon as the position size changed, now all of a sudden my emotions changed behind that position. And that's something that is another skill, obviously, is to be able to detach from the outcome of a specific trade, because you're going to have winners, you're going to have losers. But if you follow the same process, then you kind of have to submit your control to the markets, because Mr. Market does whatever he wants to do, right?
Going back to something you said earlier about poker in terms of the newbie trader and using analogies, and they always want to go all in. It's interesting you mentioned that, because when you don't have edge, right? So let's say poker, when you don't have the cards that are really going to perform well, right? And you don't have a card that has high probability of succeeding. Don't get me wrong, sometimes you see a professional not have good cards, but
they're bluffing. Yeah,
they bluff it, right?
Yeah.
And they win though. But you never see them do that every hand.
Mhm.
You see them do it, and it's always a cool story. They did, they managed to beat the other guy and take him, even though he had the better cards. It's incredible. And you'll do that with the market, right, from time to time. But it's as you say, and I think it's very important that it's a good analogy, I think, because it's never going to work all the time. That is
Yeah.
something that, yes, you find yourself in the position, you're feeling yourself as that poker player. You think you can just,
Unless
get
that's
by.
unless that's your edge, because there's some poker players that are probably really good at bluffing,
Mhm.
but they understand that they are,
Yeah.
right? And they can take advantage of it.
Mhm.
And this was a documentary that I brought up to some of my students, was Floored. It's a really great documentary of like pit traders. So essentially the transition, Linda Rash was on it. And it was so interesting because you saw a lot of different floor traders struggle with the transition to electronic trading. And the problem is that they're not seeing the emotions on the other side of the screen. So that's what I think is a really huge edge, is to be able to see beyond the charts and see beyond the candlesticks and just kind of paint the narrative of traders' emotions, right? Where are traders getting trapped? Where might they be panicking? Where might be the liquidity resting at a specific level?
Mhm.
And I think really, again, you just have to be able to adapt, because watching that documentary, right, you're going to notice that trading hasn't changed in a very long time, regardless of whatever new technology is coming out. Everybody's talking about algorithms, whatever it is. At the end of the day, it's very simple. The market's going to go up or it's going to go down. And it's about positioning yourself on the right side, right? And that's really all it is. I think a lot of traders overthink it, and they're like, well, if I learn this, it's going to give me a bigger edge. When a lot of times that's really what I kind of learned from just constantly trying to dive into new things, was I just realized over time it wasn't adding that much edge to my system. And the biggest edge was being able to control my emotions, or be self-aware of my emotions, to be able to manage them properly.
So in the chase of trying to find new things to build a better edge, in reality, a lot of the time in that chase, it would actually probably negatively impact you.
Yeah.
You're constantly trying to change stuff.
Exactly.
While, as you say, the biggest edge is in your emotions.
Mm.
Interesting you mentioned the pit traders, because I've thankfully been able to interview a lot of pit traders recently, and a couple of them just stopped trading after the pits.
Yeah.
After the pits closed, because that's what we've highlighted, is that was their edge. is
Yeah,
seeing the
some parts of that documentary, the guys were like, this is like the end of trading.
Yeah.
Some guys were like, this is it. Like, I cannot make money anymore. And then some of the other guys were like, well, you wouldn't be saying that if you were making a fortune trading on a computer screen.
Yeah.
Right. It's just that guy was able to adapt and the other person wasn't.
Exactly.
Right.
Because it was interesting. One pit trader who I just interviewed earlier today, he was talking about order flow, order book, right? And normally when we think about that, we're thinking level 2,
Mhm.
etc. But he was talking literally as in the room,
Yeah.
the orders in the room,
Yeah.
right? And I found it not hilarious. Sorry, I found it so interesting and fascinating, because it's the same terminology,
Yeah.
and it's the exact same concept as well. Because back then, that's where all the futures orders would actually go through the pits.
Yeah, exactly.
So it was this. It's the same in reality, which is different on how
Mhm.
it's being observed and sort of how it's being shown. But yet, like you said, it's about being adaptable, and that's a
Mhm.
prime example, because if you're not willing to adapt, then cool, you probably hopefully made enough money from trading to go do other things or just live your life, which is fine. But if you want to adapt, you want to continue trading, you have to be able to adapt,
Yeah.
right? And it might not be easy. Just like with yourself, obviously, making that transition to futures for a bit. Are you still trading both, or you just
Yeah, I'm still trading both.
how's that going? Like, what was that like for you? How'd
There's
you trade
different
the futures before?
nuances. There's different nuances. Like, the markets move at different times. Obviously, it's way more volatile, so there's less spread. There's zero spread, actually.
The more volatile futures.
Yeah,
Mhm.
yeah, because it's the majority of volumes coming in the AM session very quickly. Whereas Forex, there might be some moves overnight and then some moves during the AM New York session. So it's more spread out. Whereas futures, like, the volume is more concentrated, so it's happening way faster, and you can really trade like the 1 to 5 minute charts. For me, I think I still prefer swing trading, because I think as I mature in my trading career, I noticed that when I'm intraday trading or scalping the low time frames, it requires so much mental energy and concentration that I feel like it's a full-time job,
Mm.
And I didn't get into trading to have another job, right? So trying to balance that out has been a little bit different, and it's really why I still prefer the FX space.
Mhm.
But obviously, there's tax benefits to trading a personal futures account, right? I think 60% of it gets taxed as either long-term or short-term. It's like 60-40.
And was there any difficulty you had in terms of that transition?
No, not really. Like, what I try and do is detach from whatever name I'm trading, whatever time frame I'm trading, because a lot of times my daily setups, like if I'm taking a trade on the daily chart using the weekly or the monthly and it's a swing trade, A lot of times it's the same exact. I'm looking at the same exact setup on a 5 minute or 1 minute.
Mm.
It's just the feedback that you're getting is way faster.
Yep.
So you have to be more dialed in. You have to be able to analyze the data very quickly, which again, I think a lot of traders they get into that side of the space very quickly. They're like, oh, if I take more trades, I can make more money, right?
Yeah.
And it's like, no, you have to be able to analyze the data, the incoming data faster. And if you don't know what you're doing, right, it makes it that much more difficult. So you have to be able to have an edge and understand how the market's moving, understand order flow. And to me, I think it's way better off if you try and do it at a slower pace, right?
Do you still trade euro on futures or?
Mm-hmm.
Yeah.
Yeah, so I'll still trade currency futures, but
Yeah.
also a little bit of NASDAQ and
Mhm.
ES.
Interesting. Yeah, because I know a lot of people may be going through a similar process where they're losing funding and looking at the future space. And I think it's important for people to understand that and hear from people who've gone
Yeah.
through it, that it's not impossible and it doesn't have to be.
Well,
difficult.
I've learned a ton just from some reading books and just doing a lot of research in the space. I just love trading, right? And Luke Belmar actually brought up this book on your podcast, Reminiscences of a Stock Operator. Back then, there was no electronic trading, and if you wanted an order filled, you had to call into the floor. You had to be on the floor to place your order. So you needed to go through a broker, right? And sometimes that order to get to the floor would take days. Like they would send telegrams and stuff, and it would take like 3 days for the order to hit the book.
Mhm.
But what I learned from that book were a couple things. First of all, just to educate the viewers, it was about a trader from I think the early 1900s.
Yep.
And he basically he started out just reading the tape and trading in these bucket shops. But the biggest takeaways that I learned was he was able to corner multiple markets. So he started out, I think, in the coffee market, and then he moved to like plywood, soybeans. But he was only trading one market at a time, and he was a specialist at it. But he ended up being like the biggest trader in those markets during multiple at different times in his career. So he moved from the coffee pit to the soybean pit or the plywood pit, and he was only focused on that one market. He wouldn't go from soybeans to plywood the same day. He would just corner that one specific market, learned its nuances, and then really took advantage of that. And then another thing that I learned from that book was leverage. Right, he had built up fortunes and lost fortunes multiple times, and that was just something that I think every trader should take a lesson from and try and use that as a case study to never do that. Because the quicker you get the profits, obviously, the quicker you can lose them as well. So,
in terms of the process, there's two types of processes. One, obviously, you observed your own journey, right? You can reflect now. Obviously, when you're going through it, it's a bit hard to observe it in that way. But you get to reflect on your own journey, like the things that you did mistakes on, like you wish you didn't, and then move forward. And also the things you've done right over recent years, of course. But equally, now you're in a position where you get to observe other traders, right?
yeah.
And see what mistakes they're making, but also try and help them stop making those mistakes and to help them become more profitable. Is there anything in that journey so far that you've noticed, in terms of mistakes that traders are making maybe on a more common basis? Seems to be quite a common trait among many traders.
Yeah. I think the biggest thing that stands out to me is nobody likes listening to advice for whatever reason, because a lot of the advice has been preached for years on end. It's never really changed. It's just for whatever reason, people think they have the better way of doing things. You could tell somebody, don't over leverage, don't trade this specific day, because there's certain weeks where I'll just avoid trading entirely because I know the market's going to be volatile. And putting myself in the shoes of somebody that would possibly be trading for a fund or something, you have to understand the exposure aspect of it. Like, you wouldn't be allowed to trade during an NFP week where there's FOMC rate announcement. There's all these other things going on, end of the month, end of the quarter, whatever it is. You have to be able to be flat on your positions. And I guess just what I've noticed is people don't really take advice for what it is. Everybody says you need to journal your trades. Everybody says you need to stick to proper risk management. Everybody says that you need to obey the rules of your system. And it just seems like everybody does the opposite of that, right? And it's so interesting to see, because even ICT would tell us, all right, well, what was the one thing? He said, you should demo trade for 3 to 6 months. and I lost a ton of money because I didn't listen to him.
In that
It's
first
just like the rebellious aspect of human nature. We just want to try and reinvent the wheel. Whatever for whatever reason it is, I can't put my
Do
thumb
you
on
feel
it.
like
It's
it's
just
because trading, in particular, I'm sure it happens in pretty much all skill sets, where people are trying to learn, but especially in trading, do you think it's just the notion of that one trade can change your life?
yeah, possibly. I mean, I think a lot of people chase that, and that's where it turns into a casino and not, a probabilistic marketplace,
Mhm.
where, the ability to possibly, multiply your money in a very quick manner. That's really what the market is kind of engineered to do. It's engineered to get those suckers into the marketplace,
Mhm.
and that's just it's part of the game, and you have to be able to play as the house where you're going to wait for your spots, right? And the law of large numbers should be able to carry you if you're doing the right things. Because, I've had months or I've had, multiple months where I've been flat and then that third or fourth month make it all back. But you can't do that if you run out of all your chips,
Mm.
right? So you have to be able to be nimble enough and be cautious enough and conservative to protect your capital.
Do you recognize, even at this point, that you have like you've talked about having flat points for multiple months there, but even like let's say more recent, let's say this year,
Hmm.
have you had periods where you've had like a losing streak?
Yeah, absolutely.
What does
Like,
that look like for you?
so I had a 100K day, the last day of the year,
Hmm.
last year, right? Like this, I can't remember what it was, December 27th or 28th,
Hmm.
going into the weekend, and then I went on a really big losing streak right after that. It's just overconfident, and I should have known better, right? Because it's happened to me before. Like, just getting that overconfident feeling. You think you're better than the market. You think you understand the market, and again, like Tom Dancy says, like you're only as I don't know if he says it, but you're only as good as your last trade, right? And when you start going on the losing streak, the best thing that you could do is just step away from the market and give yourself some time to like reset. Because if you don't do that, you're just going to you're going to be on tilt essentially. And that's why it relates so much to poker, because being on tilt, you're not going to really play your way out of tilt.
Hmm.
Like if you're on tilt, you have to be able to step back, reassess the situation, and then wait until like you have to be aware of when you're going to be back in flow. And sometimes that takes a while. Like I think Sang Lucci actually talks about it. Like you have to understand, when he takes huge losses, he just steps away for a bit and then he's going to get back right back into it. But he's going to know when he's ready to.
Mm.
That's the difference, is not trying to push it so hard where it's like, I need to get in the market now and make it back.
What did it look like for you then? So, like, how much time did you take away at the start?
So 3-4 months, honestly, but I was working on the education, so obviously I could have been trading, but I think I just needed a break. I pushed it really hard last year and
Yeah,
I
yeah.
did really well last year, so I was okay just taking a break because I was burnt out. And I think I can relate to a lot of students out there where you're burning out because you're trying to learn too much at one time.
Mhm.
And I don't blame them. There's just so much information out there. It's like you're getting overloaded with too much information. So, taking those necessary breaks, but also having a consistent study schedule where you're not stepping away from the market for too long is important. But if you already have the experience and then it's just a matter of tilt, then you could take as long as you want, right?
Do you feel like, so if I ask you this question, would you say that 400K in capital, prop firm, evaluation firm capital, is that a lot?
Yeah, I mean, I guess it depends on what your goals are.
Mm.
But 400K is definitely more than enough to at least have a really good supplemental income. Is it enough to go full time? Now that's a question that everybody has to ask, because I don't know what your definition of full time is, right? Like if you're a college student only trying to make an extra $20,000-$30,000 a year, yeah, possibly. But if you're trying to replace a six-figure income, you have a family to support, and you're relying on a prop firm to do that for you, then there's issues, right? And I think that's why, I mean, just the trading space in general is it's ruthless, right? So you get a lot of people that honestly can barely afford living just in general. They barely have their heads afloat, and they're trying to put, I guess their last chips into this bucket,
Mm.
which is not the right approach for anything in life. You really have to make sure that you're in a proper position to be able to take risk at anything. So finding that I guess, balance between, all right, I have this much set aside, and I'm okay with losing X amount. That's, those are questions that are all personal that I think everybody has to ask.
The reason I asked you was simply because I feel like, just from observing the space, I would say more recently, but especially over the last, say, year, since we've seen all these props come into the space, um, I just feel like, so everyone's goal, as well, not everyone, but a lot of traders' goals is to get 1 million in funding, 2 million in funding, 3 million in funding, which is a great goal, of
Yeah.
course, right? But they just forget in that process that 400k or even 200k, whatever. Like these, there's still a lot of capital, and as you said, can really just supplement you,
Hmm.
right? And that change in just having that extra income can be massive. But it's just that greed or that desire of having this title of 7 figures or whatever it may
Hmm.
be, and that, don't get me wrong, it's no one's fault, right? Except for their own. But like maybe them seeing traders who are, getting these multiple big payouts and something, they just put it in his head that that's the goal now.
Yeah.
Well, I feel like before, if we go back a couple of years, where it was less firms and probably less noise about it online, people would look at a 100k account with FTMO and go, people would look at a 100k account with Alpha
Yeah.
Capital and go, wow, that's really good, right? That's great. Well, now it's like people might look at it and go, that's not enough.
Yeah.
I need,
Yeah.
I need way more than that to be full time, right?
Comparison is the thief of joy, man.
But a very important thing you highlighted there is all based on you. You got to base it on you. Like, if let's say the average income in a lot of the countries, let's say the US, UK, Canada, and Europe, a lot of the average income is going to be roughly between, I would say, 3 to 4 thousand, or £3,000 a month
Hmm.
in the UK, 3 to 4. Here it would probably be about, I would imagine, like 5 to 6.
Yeah, maybe less, honestly,
Slightly less,
like
yeah.
50, 60K.
Yeah. So for about 4 or 5, right?
Yeah.
Europe probably similar to UK. So imagine you got, let's say, 400k in capital, and you're making, let's just say, 5% a month, right?
Yeah.
So 20k.
Mhm.
After profit splits, you're talking maybe to 10 to 15k. You already tripled your
Yeah.
your average salary of your country. But I think it's just that greed,
It's that desire for more.
Yeah.
It's like,
It's
that's
just
not
that
enough.
1% of a million is this much, and if I make this, and they start doing all these calculations,
Mhm.
right? So that's, and the funny thing is, the people doing that normally still don't have an edge yet.
Yeah, yeah. Just you're overthinking the future.
Mhm.
Like, I'm gonna spend the profits on this, and it's it's interesting you bring that up because there's some people that are like, well, I'll pay you for education after I hit this payout.
Yeah.
When it's like you're trying to like predict the future,
Mm.
which doesn't rarely happens the way you think it's going to happen. So it's like you have to just take a step back and just be way more present, which it sounds corny, but meditating and being present in your thoughts and your actions is so important in trading, because if you get carried away with everything that the market's telling you, all this information, what other people are doing, and then obviously it's going to leak into your system and your processes. You're not going to be able to focus on what you should be focused on, right? Because if you're terrible at risk management, right, looking at somebody else that's really good at risk management, just that alone is not going to fix it. You have to take action, right?
You definitely do. You definitely do, because, as you say, most people don't listen anyway. But at the end of the day,
Mhm.
if you are listening, you should be looking at it.
Yeah.
At least try and think, like, is that a mistake I'm making right now? And if it's not, and it's a mistake that could come in the future, how can I look to not necessarily avoid it, but at least be aware of it, so that when it happens, I don't have to keep doing it
Yeah.
like most people end up doing.
I think the hardest thing about trading is like it requires you to go through an identity shift.
Yep.
Like
Mhm.
totally. If you're impatient, you have to become patient. And if you're greedy, you have to become more conservative. And those are, over time it can work out, but it's doing the small things that really is like it's creating that like imbalance where it's like I don't want to do these things, but I know I have to. But most people will kind of just fall into that rut of like I'll do risk management next time, or I'll journal next time. They're always just putting it off into the future because it gives you resistance. Like we don't want to do these things, but we know we have to.
And that's the struggle. I think most people want to avoid pain, avoid adversity, do things as fast as possible. And that's normally why they want to avoid those things, because that's the slower route,
Mhm.
the necessary one. One thing I was going to ask you, though, is in terms of the change you're seeing in traders. Obviously, we know we spoke on what mistakes are they making, or what's the common mistake, but what also is the common trait you're noticing or theme in people who actually make progress?
The people that actually make progress, I think they just have a head on their shoulders. Like they understand how long this might take, right? So they have a realistic expectation of the timeline of how long this might take. Not only that, but they're very focused on their own process, and they're not letting outside noise get to them. But I think one thing that people still have to try kind of understand is the edge. Like, does the edge actually fit what they're trying to do? And that's, I guess, an ongoing process. But I think, yeah, the biggest thing is just be having realistic expectations for what you want out of the market. Because if you think you're gonna come in with 1 year of experience and then all of a sudden be consistently hitting the leaderboard, it's not going to really pan out for you the way you think it is.
Mm.
You know,
One theme I have noticed with yourself and other traders I've spoken to as well is how often you will quote other traders, right? Or research other books, whatever it may be. How important has that been for you as a trade for your trading, in terms of how helpful has it been to research these very highly successful traders and read books, for example?
yeah, it's huge. I mean, some of the biggest traders that I look up to, obviously aren't social media influencers. Like the people I look up to are the likes of hedge fund managers, essentially, or like really really big traders, Ed Seykota or Tom Basso or John Rambo Moulton. Like some of these guys, Linda Raschke. You would not believe. Linda Raschke was trading like I think it was like 1,000 S&P contracts or something ridiculous. Like you can't even wrap your mind around that type of size. And when you see them like interviewing or just talking about the market, they're very humble about what they're doing because they understand that there's levels of risk involved in trading, and you really do want to emulate everything that it is that they're doing. And that's what's so interesting to me is because all of those traders, and you got the chance to interview Jack Schwager, right? And the biggest takeaways that I got from that book were, even though all these traders were trading different markets, they came from different backgrounds, they all talked about edge and risk management and psychology very similarly. Like, so, the consistently profitable traders have figured it out, and it hasn't changed for decades, right? The blueprint is there. It's just, do you have the discipline and the self-awareness to be able to put yourself in that same position, right? Because a lot of people don't have the discipline, they don't have the self-awareness, or they're focused on the wrong things. They're focused on the outcome, the process, the profits rather than the process.
It's interesting you mentioned that, because one observation I made with that as well is that if you notice some of the traders in Market Wizards, they will have very polarizing opinions, right? Scalping doesn't work. Fundamentals are useless. You can never
and then the next chapter is a scalper.
Exactly. Yeah, I think he did that on purpose. Very smart. But this is what I'm saying though. Like they'll have these polarizing opinions, right? Where they're saying that doesn't work, right? But that's their perception. That's fine. But even though they have these polarizing opinions, as you've said, the successful ones, which in Market Wizards all of them are, they all have the reoccurring theme.
Yeah.
Regardless of whether they hate each other and think the other style is completely impossible, yet the things that they hold as their foundation, that they think is the essential secrets or the things that are necessary to be profitable, are always the same. Like you said, the psychology, risk management is always the key one. I think pretty much every single one of them having a stop loss.
Yeah.
Knowing your stop.
Yeah.
And knowing where you want to get out and stuff like that. It's so insightful. And one thing that same sort of pit trader I was just talking to today, we did an observation where it was like, it's so interesting how trading has evolved so massively in terms of the last 40 years, 50 years, from pits to electronical and so on. Yet, and the same things have been said along that time of what it makes to be successful and what to not do.
Yeah.
Not be, to be a losing trader, right? Yet everyone still does those things. Like the traders or the people trying to get involved with trading have not evolved in that 40, 50 years.
Yeah, I mean, it's the market cycle, right? So you get new traders that come in that think they know better or trying to hit it big, and they kind of don't heed that advice. And it's really just, the market's going to take its pound of flesh regardless. So, there's a reason that all that advice is sound, right? And there's a reason why, a lot of the biggest traders have that advice because it works. They just know it works.
What is it about the old school traders that like these very highly successful hedge fund traders? Because at the end of the day, you're not a hedge fund, right? I don't know if you have aspirations to eventually run one. Maybe if anyone would, I've always said that very professional mindset has always been you. But regardless of that, though, it's helped you with your retail trading essentially, right? Why is that? What I know we've talked about the common traits, but why is it that, or why has it been helpful to you? The reason I'm saying it again or asking this question in this way is simply because most traders don't want to do the research or read, etc., or they don't think it's going to be useful, and they especially don't think it's going to be useful from the professional traders because we're not hedge funds, like they trade different. But I think that mindset's completely wrong, because I think the insights of someone who's handling 10x or 100x the size you're ever going to handle, or have gone through losses that you're never going to experience, is a wealth of knowledge in comparison to someone who's going to trade the exact same
Yeah.
as you, for example.
I mean, the reality is the market's only doing one of two things. It's either going up or it's going down, right? So the actions that I'm trying to take in line with some of those big hedge fund guys or big traders is it comes down to like risk and being able to cut myself off at times. And Tom Dante has talked about, you know, when he worked at a prop shop, right? They had a risk department that would cut them off. Then he had this really funny story where the guy was like super pissed off, got basically breached his daily limit, would smash the monitor, and then the guy's like, "Why don't you just go home, man?" He's like, "No, bring me another monitor, and I'm gonna smash that one too." So like, you know, I don't think people don't realize like those hedge fund traders are much alike retail traders. Like in my opinion, they're not that different. And I saw a tweet recently that said that a lot of professional traders actually won't make it as retail traders because um, they have different goals in the market, right? Like, let's say if you're an energy trader for a big corporation, you might have an entirely different goal for what your job is. You might just be purchasing oil or whatever it is for the company, and you're trying to hedge your position, you know, your overall exposure. And when you get into the retail market, it's like you eat what you kill. So you have a completely different mindset of things where, you know, you're not trying to hedge out all this different risk. You're just trying to kind of snipe a position and then ride the coattails of the institutional players. But I think the biggest takeaway is, you know, trying not to be emotionally involved with the markets. That's the biggest thing is if you can, and I did a video on this, but a lot of people try and like delete or remove their emotions, and that's just not possible. We don't, as humans, we're not built for that. Like just being aware of your emotions, like I know when I'm getting angry, I know I have to get off the desk. It's as simple as that. But when you're in the heat of the moment, right, you don't have an accountability partner next to you that says like stop smashing the monitors, get off the desk and go for a walk. And that just comes with experience. Like you kind of have to put your hand to the stove multiple times and get burned.
Yeah.
And that's really I hate to say it, but that's really how a lot of traders learn. They put their hands to the stove and get burned. And then, you know, that's basically how they learn. I mean, even some of my students, it's interesting because I'll be like, all right, we're not going to be trading this week, or the market is unclear. And then I see them in Discord, like sending trade ideas and stuff. I'm like, I literally just told you guys to just sit still, you know? And it's like, yeah, it's that resistance that you're getting. Like, I need to be active. And if I'm not active, I'm not progressing.
Yeah.
But that's not true. Like, you'd have to think long term, right? If you continue doing the things that burn you, right, you're going to get burnt really badly at some point. So just do what these more profitable traders and these like, you know, these more legendary traders are telling you to do, because the advice is very sound, and it's just about having the self-discipline, the self-awareness to be able to recognize when you're not in line with whatever it is that the profitable traders are doing.
Well, a great point to make, definitely, in terms of, you know, people assuming being active in the market means progress.
Yeah.
Which a lot of the time for a lot of traders it is. Because I do feel there's a huge portion of traders who are in a position where they can easily be profitable. And when I say easily, it's not to be mistaken for like, you know, trading is easy. What I mean is they've put in enough time, they've learned all the knowledge they need, but they're simply just doing these silly, stupid mistakes and doing things exactly like that, where, you know, it's not a clear week. They know it's not a clear week, but they're going to do it anyway.
Yeah, they're going to do it anyway. Yeah.
And simply eliminating those trades will make them profitable. But it's just a case.
They're just doing it out of sheer boredom, or they're not meeting their weekly goals or whatever it is.
A lot of the time it does come to that. They're setting so much. It's normally these little things outside of trading, you know, expectations they're putting on themselves, which is adding extra pressure and extra weight. The lack of finances outside of trading, and then they're oversizing their not potential risks, but oversizing like how much they're spending or depositing in trading that they can't afford to lose. So these factors outside of their trading that they have control of, right?
Yeah, it's a
In
negative.
markets you
It's a
don't
negative
control.
loop. It just
Mm,
keeps feeding into itself.
mhm,
So how do you break that loop? It's like there's multiple things that you have to fix in order to do it,
mhm.
which is it's hard because it's a mental challenge to do it as well.
With
Like
that, as you mentioned, multiple things. So, what is the process? Would you say is it attacking one at a time, or is it trying to make smaller changes across the board?
I think there could be both approaches. You could take both approaches, but I think for me at least, like I had to tackle the biggest things that were holding me back, which is over trading and over leveraging. Those were like the two things that were really, really holding me back. And, you know, if I had to say, I'm only going to take X amount of trades in a week, like I'm really trying to just pick the best trades. Like how many really good decisions can I make in a week? Even just outside of trading, it's not that many, right? Like if you had to sit down and say, all right, we have to make 10 groundbreaking decisions on this podcast in this week, but we need to do it like by the end of Friday. Like how many really good decisions do you think you'd be able to do without the proper preparation, without the proper research, and without being in the proper mindset? Right. So the I just noticed the less frequently I traded, the bigger my P&L was.
Let me do something a little different. Okay, let me ask you certain. I'll say certain statements as a trader, and you tell me if that's going to lead to profitability or not. Right. So, coming to the market without doing a weekly analysis or report, if you will.
I think you can do it. I just wouldn't recommend it.
Yeah.
Because I think a lot of my profits come from preparation.
Mhm.
And understanding when I can operate and when I shouldn't be operating.
And how about having a certain plan, right? But then seeing another opportunity when you sat at the charts.
That comes down to experience. I think when I have a specific plan, but something else pops up, then it really comes down to, well, I'm still going to take the trade, right? It's just my plan has shifted, and I'm going to journal it, and I'm going to make sure that I'm following everything else that should be under a specific plan.
And being a scalper, but trading six pairs.
I would say your attention is scattered.
Mhm.
You have to be really tunnel vision focused. I think trading multiple pairs works better for swing traders because you have more time to analyze things.
Trying to think of one more. I should have planned this, but instead I'm doing freestyle.
No preparation, man.
No, yeah, that's it. This is going back to that question. Not profitable. That's what it is. Well, Kyle, like I said, over 1 million in payouts. Absolutely professional mindset through and through. Done some incredible things, not only in terms of your trading, but also giving back to the community as well, helping the next generation of traders, which is absolutely incredible. Give us your biggest advice to the trading audience right now watching. What you feel will help them to go from where you used to be
Mhm.
to where you are today.
I would say don't waste any time when it comes to making those small changes and having that, I guess, small list of tasks that you should be following to get you to your end desired result. I think the faster that you can make those changes, the better. Some people just don't have the personality to change or they don't want to change. And I think that's really what holds them back is they know what they need to change. And when it comes to a coaching standpoint, I think a lot of coaches out there when it comes to their students, the students already know what they need to do. It's just they need that extra push to have somebody else tell them, like, hey, you're doing this wrong. And they need to hear that from somebody else. But if you can actually be able to process that information and understand what you need to change and are able to make those small changes, then I think it's going to really speed up your learning curve and you're going to face less resistance when it comes to meeting those end desired results.
I love that. And just final question for you, just because I'm interested. Are you a strict coach or?
I'm a pretty strict coach, I would say. But what the biggest thing for me is I'm trying to understand the biggest hurdles that a person is going through because I think the fixes are universal. I think a lot of the fixes or a lot of the the things that traders need to adjust are very similar across the board, and they can be applied to many different traders. It really comes down to the individual. Like some people are just not coachable, and even if you're not coachable, you have to be able to coach yourself because I think one thing that I noticed from playing team sports as well, there's just some people that aren't not coachable. You can't talk to them. They don't listen. They're not receptive. And it really requires having an open mind and being comfortable with your own identity. I think a lot of traders have that identity crisis going on where they don't know who they are or they don't know what they want out of trading. And just having that, I guess, idea of financial freedom or buying Rolexes or buying nice cars isn't enough to get you over the line to be able to make those identity changes, because making those small changes, it's the most difficult thing that you could do. And if you're really only thinking about materialistic things, I think you're less likely to have those changes, and you're more likely to gamble on trades and just think it's all luck, right?
Well, Kyle, 40,000 in payouts with Alpha this month. Plenty more to come, I believe. And by December, hopefully, we're going to be hosting a big UK event in December. Hopefully, we'll see you there.
Yeah,
If not,
hopefully.
when we do a US one, we'll definitely do one here, and you'll have to be there for sure. But the links for Kyle will be in the description below. Drop a comment with your biggest takeaway from this episode. There was so much to take away. And as always, there'll be other episodes on screen. Check those out. Hit subscribe. And until next time, take care.